In Powell's speech today, we heard inflation, we heard deflationary forces, but stagflation is something that seems to be a little bit more under the radar at this point in time. Why is that a concern of yours?
So stagflation, the last time we had it, Leslie, was in the 1970s. It was from the oil embargo. Clearly, that's not happening today, but we are experiencing a labor crisis where, I took my son to Burger King the other night for dinner. Their help wanted applications all over the counter. People cannot get enough labor. Plus, we're also hit with the global chip crisis, and chips go into everything. So I do think stagflation is something that should be on investors' radars because that's typically when both stocks and bonds sell off together.
So what would you say to the argument that those issues, especially as it pertains to the labor force and it pertains to supply chain, are transitory, are temporary? They're bottlenecks that will ultimately get filtered out as things return to normal with regard to COVID. Is that your viewpoint, or do you think they're more enduring?
Well, I definitely think they're temporary. I think the problem, though, is prices. Equity markets and credit markets, so corporate America, is priced for perfection, right? We are priced in for a super high growth environment, very strong earnings per share. And if companies cannot deliver on those expectations, that's when you can have a pullback in both credit on the bond side and also stocks on the equity side. So I think it's really not, yes, all these things will be temporary and we will get through it and things will normalize. It's just a question of whether we're going to have some bumps in the road because corporate America is priced so strongly.
So then should investors be hedging against stagflation? If so, how should they do it?
So stagflation is a weird thing, right? It's a very strange, it's higher prices, but lower growth. It's very hard to know what would actually work in stagflation. I don't think oil would necessarily, although it did work in the 70s, I think that was the cause of it. I don't think that would be a good hedge. Potentially adding inflation protected securities would be helpful to portfolios. I also think owning volatility. I know, Leslie, you and I go way back, and volatility is a passion of mine. And I think it's a nice non-correlated asset to own. But I like in this environment, interest rate volatility, not when most people hear volatility, they think equity vol, but anything that has an options market has a volatility market because volatility goes into pricing options. So specifically, I like fixed income volatility. I think it's a good buy.
You're bringing me back to my business school days with the Black-Scholes method. Thank you, Nancy Davis. It's always great to see you. We appreciate you being here.